So we will see a mass market going into silver and a speculation which will be much even bigger than the Hunt brothers in the late 1970s and up to 1980 when silver went from virtually a couple of dollars to $50. Then, of course, it went down dramatically. This time we have an underlying industrial demand of a magnitude that the world has never seen before. So this is why silver will be going up for a much longer period and much faster than it did in the late 1980s. So silver will go up 2-3 times as fast, at least as gold.
Legendary investor Egon von Greyerz has long warned that the foundations of the global financial system are shifting, and his latest outlook underscores how power over the precious metals market has quietly migrated from the West to the East. Once dominated by Wall Street and London trading desks, the real demand is now being driven by Asia, where gold is viewed not just as an investment, but as a safeguard against instability. China's recent decision to allow its enormous insurance funds to allocate capital into gold marks a profound change, introducing a fresh wave of institutional demand into a market that was already experiencing supply tightness. At the same time, India continues to reinforce its historic role as a reliable buyer of physical gold, with cultural and seasonal demand ensuring a consistent baseline of consumption. Yet while gold remains the bedrock of financial insurance, silver is increasingly emerging as the undervalued engine of opportunity. What makes silver distinct is its dual identity. It carries the safe haven qualities of gold, but also fuels some of the most important technologies of the future. Solar panels, electric vehicles, advanced electronics, and energy storage all rely heavily on silver, with demand from these industries climbing at a pace that global mining output cannot match. China's rapid industrial expansion and its aggressive investment in renewable energy make it the largest consumer of silver, ensuring that industrial needs will continue to strain already tight supplies. Historically, silver has shown a pattern of explosive price movements once momentum takes hold, often far outperforming gold in percentage terms during bull runs. For investors navigating this environment, the takeaway is clear. We are entering a phase where the traditional roles of gold and silver are expanding into something much larger. Gold is evolving from a hedge into a global benchmark for security and trust, increasingly dictated by Eastern markets rather than Western policymakers. Silver, on the other hand, stands at the crossroads of financial refuge and industrial necessity, giving it an unparalleled advantage in today's economic transformation. This rare convergence creates conditions where holding precious metals is not just about preserving wealth, but about capturing the kind of generational opportunities that arise only in times of systemic change. Now, we present the clips from Egon von Greyerz' interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
Now, we've been saying this now for a few years, you and I, and especially since the US and therefore the EU always follows the US, whatever they say. The EU and the US confiscated the Russian assets held in dollars around the world. Now, it is obvious that the Eastern banks and the BRICS central banks are not any longer going to hold dollars within the global monetary system or banking system or central banks. That's why we're going to see a gradual shift here from dollar assets as reserves for central banks into gold and silver. Now people are starting to realize that silver is also incredibly important. Remember that silver is more than 80 times less in price to gold. So silver is often called poor man's gold. So a lot of people who can't afford to buy gold will buy silver. So we will see a mass market going into silver and a speculation which will be much even bigger than the Hunt brothers in the late 1970s and up to 1980 when silver went from virtually a couple of dollars to $50. Then, of course, it went down dramatically. This time we have an underlying industrial demand of a magnitude that the world has never seen before. So this is why silver will be going up for a much longer period and much faster than it did in the late 1980s. So silver will go up 2-3 times as fast, at least as gold. But remember, silver is very, very volatile. So holding just silver is, in our view, dangerous. You could maybe hold silver 25-30% of your total precious metals holdings, but hold gold also because it's much more stable than silver is. But the upside in silver, speculative upside, is enormous today. Now, compared to money supply, monetary basis, whatever you compare it to, gold is extremely undervalued today, and we will see it overshooting. And of course, the monetary base, remember, or the money supply will grow exponentially in coming years because of the amount of money printing required to satisfy the deficit spending of most governments, especially Western governments. And that, of course, gold will follow. So, I mean, the gold is the only money that has survived in history. We emphasize that time and time again. And why is gold the only kind of money that has survived? Because it's the only money that's produced by nature. And therefore, it can't be manipulated, the physical gold side, and it can't be manufactured. And all other currencies are man-made, and gold, as I said, is nature's money. And this is why we will see gold as the only instrument that over time will maintain its purchasing power like it has done for thousands of years. More important than ever today, please hold some gold for your own protection and insurance, and for your family or for your company or for your investment portfolio. And also hold some silver because you see tremendous potential there. But hold it outside the banking system in a safe jurisdiction, preferably outside the country where you live. It's very important, so that you can actually reach your goal if a country wants to confiscate it in the country where you live. But Jan, so we talk about India here, and of course they are, as a people on the whole, I mean, all Indians hold gold. And here we're looking at now institutional money also moving into gold because of the change of rules. The same is happening in China. China is now talking about first 1% for insurers into gold will be allowed, and that is most probably going to increase to 5%. And when these massive countries put major amounts of money into gold, we are going to see a massive demand that, as I have repeated many times, cannot be met by physical gold at today's prices. So, because there is not enough gold in the world to deliver to all of the buyers that are now going to look for gold. So the only way that they can get gold is to pay higher prices. And we are going to see, as I said many times, gold going up by multiples from here. I repeat, going up by multiples. The world doesn't realize that, and the gold has been now going sideways since April, really. From the beginning of April, gold has been going sideways. The next move is imminent, in my view. Whether imminent is tomorrow or in a week or in a month, it's irrelevant. So we have now seen a consolidation of over 4 months, and the next move is very near. So that's why, as we've been saying since 2000, hold gold for wealth preservation. We went into it at $300, is now 3,500, and we're going to see gold going up to much higher levels. And now is the time, if you haven't got it already, to hold physical gold outside the banking system, obviously, because it is still today, even though the increase has been very high, for I said, over 10 times in the last 25 years, that's just the beginning, in my view. We're going to see a much higher gold price. And it's not because I'm a gold bull, it's only because the world's currencies are continuing their drop to zero, and that will be reflected, obviously, in the gold price.
In 2021, the global financial system reached a decisive inflection point as long-term interest rates hit their lowest levels in history, marking the end of an era and the beginning of a structural shift. What has followed is not a passing cycle, but the start of a multi-decade trend defined by persistently higher rates, entrenched inflation, weakening fiat currencies, and a resurgence in precious metals. While central banks may attempt to offset the damage through short-term rate adjustments, the larger trajectory is firmly established. Expanding fiscal deficits, relentless monetary expansion, and inflationary forces that are now deeply embedded leave little room for reversal. With debt burdens already at unsustainable levels, higher rates will steadily erode confidence in sovereign credit, forcing losses on bondholders not through outright defaults, but through the slow grind of devaluation and currency debasement. The implications of this shift extend across every major asset class. Equities, bonds, and real estate, traditionally viewed as the foundations of wealth, are increasingly vulnerable, with stock markets in particular facing the possibility of historic declines that could wipe out significant portions of global capital. A market correction of this magnitude would significantly alter the distribution of wealth, thereby undermining the financial stability of both institutions and individuals. Amidst this reordering of value, one safe haven remains resilient: precious metals. Gold and silver, grounded in scarcity and intrinsic worth, stand apart as assets immune to policy missteps and the erosion of trust in fiat systems, positioning them as the ultimate stores of value in a period of accelerating instability.
Since 2021, when the long-term fall in interest rates bottomed, I've been very clear that we are now starting certainly a 20, 30-year cycle up of interest rates, higher inflation, higher interest rates, and of course falling currencies and rising precious metals. If they decrease their short-term rates for a while, once or twice, it has no significance. The long-term rates are telling us what is happening in the market, and it's much more difficult to control the long-term rates. And they're going up, and they are going to, I've said that for a long, long time, 10, 15 years at least, that the long rates will pull up the short rates, because with the deficits, with the inflation we have, and with the money printing we have, it is not possible over time to control long-term rates or inflation. So we're going to see much higher rates, whatever the short moves are. We should not worry about that. The rates are in a long-term uptrend, and inflation also. And you can never print unlimited amounts of money and have zero inflation. It just doesn't add up. So yes, high rates, and that's of course what very few governments can cope with the amount of borrowings they have and the amount of deficits they have, which are increasing the borrowings. So it's going to be, I think many government bonds will actually fail, and countries will default. They won't call it a default. They will just print more money, and it'll be automatic devaluations. But in effect, it will be a default, because currencies have to go to zero, as we always expect in every monetary era. I think what markets are in for a major turn, a long-term downturn in stock prices and stock valuations. Whether it starts like it often does in September and then accelerates in October, or it takes a little bit longer, it's irrelevant. To be in the stock market now is extremely high risk, and once this fall starts, it's going to lead to, in my view, at least in relation to gold, it will probably be a 95% fall of stock markets, but also in absolute terms, it will probably at least a 75% fall of the stock market. So that we are looking at a massive wealth destruction taking place now. You think about stock markets falling, bond prices falling, and property prices falling. The rich will be much, much less richer in coming years, and they're not prepared for it. They are not prepared for the total fall in their net worth and in the value of their assets. and that's going to lead a totally different wealth distribution in the world.
The financial landscape is entering a decisive turning point, where the weight of rising interest rates, ballooning debt burdens, and weakening currencies is setting the stage for precious metals to reclaim their historic role as protectors of wealth. Gold continues to serve as the foundation of stability, while silver, with its dual role as both a monetary asset and an essential industrial metal, carries the potential for outsized gains as demand expands against tightening supply. In an environment where traditional investments such as equities, bonds, and property may struggle to provide consistent security, the strategic importance of gold and silver becomes increasingly clear. The coming years may not only reaffirm their relevance, but also elevate them to the forefront of financial resilience, leaving investors to consider whether these age-old havens will remain unchallenged or if new contenders will emerge in this evolving global order. How do you anticipate the price trends of gold and silver evolving in the near term? Share your thoughts in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the next video. Thanks for watching.